Welcome to Tax Insights, presented by Hawkins Ash CPAs.
And welcome back to Tax Insight here with Jeff from Hawkins Ash on WOMT. Jeff, good morning, sir.
Good morning, Terry.
How are you today?
I'm doing well.
Excellent. Jeff, today we're talking about the child tax credit.
We are, because, with the American Rescue Plan that was signed into law back in March, it included a provision that, we talked about a month or so ago, and that provision is the one that increases the child tax credit and changes the way that it's paid out.
So let's start there with a quick refresher for our listeners on that.
Okay, so the child tax credit, was started somewhere around 1997 or so, and it was about $500 per child, and it was non-refundable, which means that if you didn't owe any tax or you didn't have any tax, you couldn't get the credit. Well, over the years, that credit has increased to $2,000 in 2020, and part of that was actually refundable. Well, beginning with this new tax bill, in 2021, the credit is increased to $3,000 for children that are ages 6 to 17, and it actually increases that credit to $3,600 if your child is under the age of 6. And in addition to this increase, like I mentioned earlier, this credit is now going to be paid out differently. It's going to be paid out in monthly installments.
So let's take a step back first and foremost. Who is actually eligible for the credit itself?
So, on top of the age limits that we just talked about earlier, there's also income limits. And like we talk about all the time, Terry, there's always income limits.
Right.
So the full credit is available for a single individual with an adjusted gross income of $75,000 or less, and married couples double that, $150,000 or less. Over these amounts, then that credit starts to phase out.
So where are the phases, limits higher before? Were they higher then?
They were. So, and that's a really good point because, those who phase out of the higher credit, based off of that $75,000 or $150,000 limits that we just talked about, they can still qualify for the $2,000 credit, which was available in 2020. Now, like you mentioned, the phase outs were higher and are higher for that $2,000 credit. Those phase outs end up being about $200,000 if you're single and $400,000 of income if you're married.
So you mentioned something about monthly installments. Tell us a little bit more about that.
Yeah, so for those eligible for that higher $3,000 or $3,600 credit, the IRS plans on sending out a monthly payment of somewhere between $250 and $300 per month beginning in July of this year. So this ends up being an advance payment on that credit. So about half the credit will come back in these monthly installments, and the rest will come when your tax return is filed. So they change the timing of when you're going to actually get this money a little bit.
So I do know that there is talk about the first payments not coming out until like July. Curiosity, what do you think about that?
One of the things the IRS said over the last couple months is that with the stimulus checks that they're still sending out and the backlog of tax returns, which is still really big, the July may be a fairly ambitious goal. So we'll have to wait and see. But just within the last couple weeks or so, the IRS has said that they think they're going to be able to reach that goal and start sending out these checks or these direct deposits in July.
Interesting. Now, I know that before the show started, we were talking a little, and you mentioned that you have some concerns, wondering if you could share some of those here on the show.
I do. So, one worry that I have is that, people are used to getting these tax credits and getting a large tax refund when they file their return. Well, if some of these credits get paid out over the next 6 months, that's going to decrease their tax refunds. And, if they have plans for using a larger refund like they do every year, they may want to relook at those plans because I think the refunds are going to be smaller because they've already received some of it.
Interesting. Lastly here, because time is running up, but is the expanded child tax credit only for 2021?
It is, but I know that there is talk in Congress about extending it. And if that does continue into 2022 and those monthly payments continue, then the year-end refunds are going to be even lower yet. So really be careful on what to expect your refunds to look like every year based off of these credits that are being paid out on a monthly basis.
Jeff, great information each and every week here in Tax Insight. For those listeners that want to connect with you and the team at Hawkins Ash, how do they do that?
I would follow us on Twitter, like us on Facebook, or go to our website, hawkinsashcpas.com.
This has been Tax Insights, presented by Hawkins Ash CPAs. Learn more online at hawkinsashcpas.com. Hawkins Ash CPAs, part of your business, part of your life.